Hi, this is James Shrug with Westpac London's end of day report for Friday the 15th of June. Look, some pretty disappointing news on the economic front from all over the Northern Hemisphere today to report, but despite that markets are higher, mainly because of an expectation that there's a greater chance of further Fed stimulus or indeed coordinated central bank stimulus from several central banks around the globe. I'll run through the news stories. Firstly, we had at the Mansion House speech last night here in London, the Bank of England Governor announced a two-step plan to help reinvigorate lending in the UK. There's a funding for lending program designed to provide banks with funding at just 0.25% above the bank rate, which is currently 0.5%, provided the loans, the funds used for loans to households and corporates. And they're going to actually fire up the previously announced ECTR, that's the Extended Collateral Term Repo Facility, which will provide 6-month funding every month, a minimum of £5 billion, to help provide some offset against the higher funding costs that are prevailing in markets today, and also the regulatory issue that's requiring banks to keep high levels of capital. So that response from the Bank of England, in fact we've got an FOMC meeting next week, it's all added up to a sense amongst investors who I think are predisposed to wanting to see further stimulus from one or more central banks. It's really fired up those hopes that something's coming and something soon. So even though industrial production in America fell 0.1% in May, reflecting a 0.4% fall in the factory sector, autos especially weak, although consumer sentiment in the first reading for June from the University of Michigan fell from 79 to 74, from its highest this year so far to its lowest this year so far. The fact that Canadian manufacturing sales were down 0.8%, that's the third fall that they've shown this year in 4 months of data. The fact that although the European trade surplus actually widened, it did so because exports, which fell 1.3%, were offset by a 3% import slump. That export decline for Europe 2 or Euroland was the second consecutive monthly fall. And in the UK, the trade deficit there widened from 8.7 billion sterling to over 10 billion sterling. Over 10 billion for just the second time ever. There was a huge, an 8% slump in exports, 8.5% actually, and imports fell 2.5%. So wherever you look, you're getting this evidence that trade is slowing down, imports are falling away, exports are falling away, confidence is falling away, industrial activity is slowing. So despite all of that, we've seen some pretty decent gains on markets today because of this hope for further stimulus. In the London market, we've got a 0.4% gain. The bank's doing particularly well here. The French market's up 1.7%. The German's up 1.5%. The Spanish market up 0.2%, and the Italian market up 2.2% today. The Dow, as I speak, and it's about 4:30 in the London afternoon, is up about 0.5% at 12,710. Commodity markets are doing better today as well. We've got oil prices up 0.25%, looking at $84.12 a barrel, and steeper gains for gold, up more than 0.5% at $1,629 an ounce, and copper's up 1.2%. The Aussie dollar at 1.006 is now comfortably back above parity against the US dollar, being buoyed by this equity market positive sentiment, stronger commodity sentiment, and this sense that there's going to be stimulus in other jurisdictions, which gives you extra reason to buy Aussie dollars, I suppose, from a yield perspective. Don't forget, we've got the Greek elections, second version, on 17th of June, Sunday. We don't think there's going to be any significant sort of development in that poll that will lead to Greece leaving the euro. In a sense, it doesn't matter who wins the election. The bailout that's been previously agreed does need to be torn up, and more assistance provided to that economy, which is going through an absolute humanitarian nightmare. No wonder people voted against the previous administrations. Anyway, that's the story for next week, very much so, and I'll be back then.